All right, guys, it is an extremely fearful day today in the markets. Bitcoin down 5%, over $5,000. Altcoins with double-digit losses. The stock market down 3 days in a row, nearly 3%. And we're seeing some more signs of the economy and the markets imploding. However, I do have good news, a lot of good news for you, in fact. Plus, I want to talk about this multi-year bear market that I keep seeing pop up time and time again. That goes for Bitcoin primarily. So let's dive into it. No time to waste today. Like, subscribe to the channel. It is your home of macro cycle analysis. I will be covering Bitcoin, altcoins, cryptocurrencies, stock markets, and of course, the real estate cycle. Now, there is a signal that we looked at going back over 2 months now, and I want to revisit that towards the end of the video. It's got to do with the real estate cycle, so stay tuned for that. Also, we've got the report coming out in a matter of hours. Link in the top of the video description, name, email address. You're not a robot, I hope, and then subscribe. You will receive that very, very soon. So that is your free crypto and economic report coming out. Okay, so BTC, it shouldn't be any surprises here that we are now down to 91,500 at the time of the recording. Yesterday saw a 96K top, and if I throw a few of our lines on here that we've been tracking now for weeks, the price levels to the downside are around that $89,000 to $91,000. Now, we haven't broken through that level yet, but we have tested the low from the 3rd of February. So the market did not go above that level. It didn't rise above 103. And as we've been looking at for, I guess we could say, weeks now, anything that wasn't over $100,000 was likely going to be a failed test of those levels. So just was not able to get back above there, and ideally around 103 is the level to beat, but we're down here at 91,000. So what could we see to the downside? And of course, we've got to get into the multi-year bear market and where that would actually come in. So for now, the market's down 8.6% from the rejection at 99,500. We are looking at these lows here at 89K, so that one there is not actually that far away from the current price. Is really only a couple of percent. To the 100% level of this range projected from the top takes you out to about 11%, and then to the 50%. I know I'm throwing a lot of numbers out here, but we'll wrap it up and make it a very simple way to look at it, just a simple number to track. The number to the downside is $79,000, so that's 13% away from the current price. We should know by now from the top to that 50% level is around a 27% correction, and is still a smaller correction than the entire 2024 correction. That was 33% from March to that August low. So in terms of this multi-year bear market, there are still no changes to the macro uptrend, and to say that we're going to get a macro bear market at this point is way too premature. There haven't been any changes at this point. I would be looking at something underneath the low 70s to actually start making that call. You can't make these massive macro changes, these calls for the macro change in the trend this early on, well, this close to the highs, because there haven't been enough signals to suggest that. Maybe someone has an absolutely fantastic crystal ball that they want to share with a few more people. Well, not everyone, but a few more people. But that would be almost impossible to call. It'd be like saying at the top there that, you know, this market's going to collapse from here. You can say that if you were calling it every single day, and those people will basically jump on that bandwagon and say, look, I said it at this point. But we're really just looking at probabilities here. And I'm still looking at any sort of tests to around 89K and bounces. That's going to be, you know, relatively fine for BTC. You're still in this trading range, and it will still be fine if we drop to high 70s, even in the mid 70s very briefly, get some closes back above 79 or 80K. That's still going to be absolutely fine for the bull market. It has happened many times before in the past. People are still freaking out about these sorts of things, just like in 2017. So we had the previous old high was in 2013 at around $1,200. You saw it happen for BTC in the early part of 2017. So this rise up here, big correction, another rise, big correction. And then the market really started to charge after that point. So I guess if you take away anything from this video, if this market gets through this time, I think it will. You're obviously welcome to your own opinions with whatever you want to do with your own money. If the market gets through these times and starts to climb high and break out of these highs, the charge could be relatively quick again, and you would start to see a lot of the fear wipe out of the market and the belief, I think more importantly, the belief that this thing can't go down again. The talks of the super cycle, the talks of Michael Saylor and 1.5 million or 13 million, whatever his calls are, right? That stuff will come back really, really hard. And then you'll see this raging bull market to whatever tops come in. You know, we've looked at prices conservatively of 120 to 150 and also 180 in a conservative manner. Then we can start to get crazy later on in the cycle if the prices break through these tops at around 109 and then get to those targets. I worry about the craziness in those crazy times. But in terms of a macro multi-year bear market, still does not look like that at all. Now, we're still seeing higher prices. Yes, we have had a few days down, and importantly, we've seen 3-day corrections for the S&P 500. Berkshire Hathaway, obviously Warren Buffett's cash pile rises to new records at roughly $330 billion. But remember, old mate, so these will be some of the fearful topics here. Old mate here at Buffett has been a net seller of equities for the 9th consecutive quarter, yet the S&P 500 has been higher 8 out of the past 9 quarters. We can throw on our quarterly chart here, take off a few of the lines, look at all the greens on the way up from 2022. The reason I'm bringing this part up is because in these fearful times, you start to see a lot more of the bearish headlines come back. You'll start to see reasons why this is the end and why things need to be, why there needs to be a major correction. And generally at these times, that's when people get feared out of the market. They did it all through 2022. It was like every single day it was told that these markets aren't coming back and you're going to see a major correction to some significant price targets down here, you know, below the COVID lows. It never happened, and it wasn't on the cards at that time because we had further to go in the macro cycle. And what it turned out to be was a beautiful, healthy correction back to the previous old all-time high. So Buffett's selling. Why the hell is he selling? Well, he has billions, if not, Berkshire Hathaway might be worth $1 trillion, $1.5 trillion, whatever it is. It's worth a lot of money, and he has a lot of cash. Therefore, he has to be selling on the way up. And maybe he's a year early, 2 years early. Either way, he's still making profits. You and I don't have that problem. If we sell out our entire portfolios, we could do that in a minute, in an hour, and it's very unlikely going to change anything in the markets. If Buffett does that, he is going to collapse the market. So he's got to be doing it on the way up. He's got to be selling in to the good news. Now, of course, I'm referring to larger market caps. If you're in some sort of shitty meme coin, altcoin market cap, and you sell off $1,000 worth and it dumps the market, well, that's not what I'm talking about here. Those are those illiquid markets that you want to avoid being in. Or if you do choose to be in them, you have to sell when the market is hot. It's very difficult to sell on the way down. So when you start seeing those gains come in on those altcoins, get out of them. You were basically Buffett in that case. You have to get out on the way up, because if it turns around and there are just no more buyers anymore, it very quickly comes straight back down to zero. So that's the first thing, you know, looking at the markets and how we start to see some of the bad news coming in and those headlines start to grip the market. In terms of where the S&P 500 is right now, look, we're not below any of the key turning points here for the macro cycle. However, you guys should note the 3 days down from a significant top. Now, I've had a look at this on the S&P 500, and I will have to do more research on it. But, just going back, you can see one of them here. This was out of the top from July. But did you know that the August low was going to come in? Did you know there was going to be a Japanese yen carry trade event that freaks the market out and you hear recession calls again at the low? No, I didn't know that was going to happen, but I did see this. 1, 2, 3. We looked at it on the channel as well. It just suggests that you're probably going to see the market down for a longer period of time than what we have seen in the past, or somewhere around that time. It's going to be a more significant event than any of these other sort of corrections, which have only lasted a day, then a reversal, a couple of days here, and then a reversal, a day here, then a reversal. So it's probably not going to be like these sorts of reversals on the way up. This one's probably going to be a bit more significant. And that's what we've just been signaled here. You got a 50% level that's just been broken on the short term, the double top here. Therefore, there's a slightly higher chance now that we head to around 5,940 points. If that happens to break down, and of course this 50% level as well at 59.88, those two levels go, then we're probably looking somewhere more towards 5,800 points for the S&P 500, which is probably going to send shockwaves also through Bitcoin. And of course, that also means cryptos and altcoins. It could be a little bit worse for them. Well, it's going to be much, much worse for them than it is for BTC. So right now we've got 1, 2, 3 here, a little bit of a break here of the 50%. Next 50% level, I think if the market gets through these two, you're probably going to see it come back and test somewhere around 5,800 points. So we'll keep a watch out for that. But the good news is there's a lot of wiggle room to the downside. You have the support levels at 57, the 50% level at 56.43, some more lows back here at 5,400 points, and then also the low here at 5,100 points. So either way, this might just be a bit more of a grind into the March period. So that's the traditional markets. And I've also got the real estate cycle later in the video as well. But let's just have a look at one of the stocks here before I get back into Bitcoin and the altcoin correction. When could it be over? All this sort of fear that goes on with the markets. MicroStrategy. Now, I often get a lot of kickback when I talk about MicroStrategy because I guess people love to invest in this, or they love to buy it, and they hope that it's going to do massive gains like it has done for this cycle so far, from 2022 up to the peak of 2024. 4,000% return in that entire period. But as we've been covering here, as the market had been breaking down, putting in lower highs while Bitcoin was putting in higher highs. Here is Bitcoin in the white bars in the background. These have got higher highs, and of course, this is on the stock chart, which means it doesn't trade on the weekends. And therefore, a few of the bars are missing for Bitcoin. You still had a few more higher highs here, like around the weekend of the 5th, 6th, 7th. You've got lower highs continuing to form. You've got 50% breakdowns. And over the last 2 days, MicroStrategy has broken a significant 50% again at 322 with a lower high. And now it's testing the $278 level, which is one of the last lines of support here. I'd give it just a little bit of room, a little bit extra here to go down to around 220, 225, which are these two previous lows. But other than that, if this starts to break at 278, almost guarantee, I can't ever guarantee anything 100%, but I almost guarantee that you're not going to see a new all-time high for MicroStrategy this cycle, just based on the weakness that has been forming in this chart. Now, yes, it can move up. And basically, if it moves up from this point, I always hear people say, it's wrong, blah, blah, blah. I'm just literally reading the chart here from looking at weakness and strength. And sure, it could go up. It can be a great trading opportunity. And in terms of trading, you have maybe 10 days there in terms of a trade from the low to the high. So that's a different story. I'm not talking about trading these things very short term. I'm talking about the overall structure here and what this means for BTC. Maybe a multi-year bear market, maybe not. What we've used this before and currently is a look at the end of the cycle for BTC. So this is the part that you want to listen to now. Hit the like button, subscribe to the channel. We're looking at the time frame to the end of the cycle. Last time, you got an all-time high for MicroStrategy, and then 273 days later, which is essentially 9 months, you had the market got an all-time high for Bitcoin and a lower top for MicroStrategy. It seems like it's happening again. We have an all-time high here for MicroStrategy at $543. Obviously, there are stock splits and all that sort of stuff. $543 is the number here on the chart. 9 months later takes us to roughly around mid to late August of 2025. So I don't think we are in the midst of a multi-year bear market yet, but I do have something that I want to share with you later in the video in terms of a multi-year bear market based on something bigger, something much, much bigger than the MicroStrategy chart or the S&P 500. Of course, I'm talking about the real estate cycle here. So MicroStrategy is another, maybe what I'm calling here like a canary in the coal mine, that yes, we might still have a little bit of time here, and we've got a countdown, roughly speaking, from about the November top, just looking at only one data point, unfortunately. So we've got to marry a few more of these together, and some of them are coming out towards that second half of 2025. Let's see what happens from there, but at least we can see from the previous cycle, somewhere around that period of August. Things aren't looking too bad yet. Something else which looks bad on the day, but is essentially a resetting mechanism, is your fear and greed index. Now, of course, this is the one that I've been following, the coin market cap one, which you possibly see in other, I don't know, influencers, YouTube or X or whatever it is. I don't necessarily like that one as much because this one has done a much better job at forecasting where the sentiment resets, and it requires a lot more patience. That is something that I've definitely seen in crypto the majority of people don't have. If you can just build your patience, and how to do that is basically having your plan there, that is going to help a hell of a lot for your trading and investing, whether it's with Bitcoin, cryptos, stocks, the stock market, which actually needs a lot more patience than what people are willing to give. You're going to beat 95% of people. Now, of course, the best place I think to do that is with TIA Premium. I'll leave that up to you, but if you do want to find out more, there is a link in the video description for TIA Premium. And if you want to just get a bit of a taster for it, the link for the free crypto and economic report is also there as well. Just name, email, address, and you'll receive that in the next few hours. But the reviews that we've had, which you will get if you sign up here, you'll see the reviews from members saying that they wish they had signed up sooner. That's a very, very common line that we get from a lot of people that have signed up, because they get to see how this thing works from the inside out. So in terms of the fear and greed index, let's go there. We're at extreme fear. This is the first time that we have hit this for this correction. Over a year ago, we have touched it back in August, but for this correction where Bitcoin made it over $100,000, we've finally got back to the extreme fear. Now I'm going to go into that in just a little bit more detail in a moment, but just to have a quick look at the liquidations here. Let's get the words out. $952 million, 24 hours have been wrecked, getting very close to that $1 billion marker again. The fear and greed index, congratulations to you guys. It has been working out very, very well. And then also the exchange volume has just ticked up a little bit here. The data here is from the 23rd. So in the next couple of days, we'll see what happened over the last 48 hours. But as we talked about in yesterday's video, maybe there's some sort of minor base beginning to form here. So $43 billion, similar to what happened last time. You need to see a base form on this exchange volume in order for the market to turn around. So we're seeing that now with the exchange volume. I'm seeing it here with the fear and greed index finally hitting back to extreme fear. The liquidations keep freaking out, keep wrecking those who are trying to buy the dip on leverage. So it's still flushing out that sentiment in the market. And we're also seeing the USDT dominance continue higher. This has been one that's worked out very, very well. It's been a very similar pattern to what happened in 2021 at that low. So that was back here. Sorry, for Bitcoin's high, but the USDT dominance low. The beauty about that is that it was a bit of a timing mechanism here that then led to the crash for BTC. That was when Bitcoin crashed from about 60K down to about 30K. So you had this big wipeout event here. Now, where we currently sit, I suspect we might have to come up and test around 5 to 5.3%. Now that we've gone past the 50% level. We've got 1 day close here above 4.75. I think if we get another day or two, this is the first time it's closed above that level, putting in higher lows, then it might have a little bit further to go and wash out the final, I don't know, hype that's been left there. I know the response is there's barely any hype left, but sometimes it just needs to do that final cleanse. Those who just want to get rid of those final coins and just say, I'm done with this thing, and they leave, they don't invest in Bitcoin or crypto again, maybe they take their money elsewhere, they're just sick of it, that might be that final time there. And so I'm looking towards around 5 to 5.3%. Now, if it goes beyond that, there's really only one more resistance level left, about 5.5 to 5.6, that I would still be happy with this being part of the macro bull market. If it starts to get beyond this diagonal, then I think the whole game is in trouble. And yeah, we could be looking at that multi-year bear market for altcoins. Bitcoin might have a chance, but yeah, if it goes beyond this diagonal, which is also the 200% of the double bottom, which is also past some of the key levels up here and then holds above the 50%, that's not looking good. But we're a long way from that, so let's not worry about it. Anything getting rejected here at around 5.2 could be another bottom for the market, which lines up with the exchange volume resetting, which lines up with the fear and greed index resetting, which lines up with the liquidations resetting, which lines up with the prices, the price chart for Bitcoin resetting, and also the total cryptocurrency market caps, so on and so forth. So it's all kind of like lining up to this point here to get a rejection around 5 to 5.3. Okay, so where does that leave things? I think once we get that, reassess. If we can get back down under 4.6 to 4.8 relatively quickly, then we're on for another move to the downside for the USDT dominance, which is fantastic things for Bitcoin and cryptos. This is our little F-off massive bull mania. If it is to break 3.7, it wasn't to be this time round, and now we have to wait for that game to play out again. Now, over to some altcoins like your ETHs. Again, a rejection very close to 2,900. The highest price it got here was 28.55, now down just under 2,500. It's not looking great, even though we only have 4 days to go for the end of month close. It's not looking great for the end of month, considering it's underneath all of the previous month's closes for the period of August, September, October, but we have 4 days left. So ideally, you would see ETH close above what's this close here? $2,500, and then you've also got 26. So it's got about 100, 150 bucks worth to climb over the next 4 days and hold above for some sort of strength here. Sol has broken the $150 level. In yesterday's video, it was sitting around 170, and over the last few weeks, as Sol has been rejected multiple times at $200, we have been watching for Sol to break down and eventually test 150 bucks. This time, it has hit it and broken down from that level. So it really, I guess, hasn't come as a surprise with the weakness shown after the major pump and reversal. And at the time, I guess a lot of people didn't want to believe that this was a bit of an abnormal bar and that it was a period of, possibly a final top. I didn't know that this could be a final top, and it hasn't been confirmed yet as a final top, but it is a very significant top now at $295. The market held for a few days above the previous highs or in the previous high region, and then it broke down from that point, getting rejected every single time it tried to rally. Therefore, we're showing very, very weak signs. Couldn't hold above 210, and as we see it now, it's back below both of the 50% levels, which then increases the chances that it comes back to test the 110 to 120-ish level. I'm not going to go any further because that just seems, I guess, a little bit depressing for the Sol holders here. But this is the sort of stuff that I go into detail when it comes to learning how to trade, learning how to read the charts, learning what the swing chart means, and learning the importance of the strength and weakness with the 50% levels. And even when it seems too late to be getting out, there's always more that can happen to these markets as they continue to show weakness. Talked about already, TIA Premium, link in the video description. So for Sol, we are looking further down the chart here at some of the next support levels, if they in fact become support levels. XRP, on the other hand, slightly stronger here. It is above the 50%, still holding roughly around that 230, but I'm still looking out towards somewhere around 180 to $2 for another retest. I think the market needs to get back there, needs to show that it can hold this strength at around 180 to $2. Yeah, that's your 50% extension, and then also the previous low and the 50% of the range. As I said, it's stronger overall because it's still in the stronger half here. It's still above $1.80. And it doesn't mean in the short term, it just has to test some of these short-term levels. It's not saying anything negative about it in the longer term. It's just mostly there for the shorter term. Below $1.80, then I'm looking out towards around 120 to 160, previous levels that the market found some support at before it went on its run to 340. So even then, I wouldn't be getting overly bearish. That would just take the total correction to something that it has done in the past. It's done 60% corrections, it's done 70% corrections, and still gone on to put in higher prices. So back down to around this 140 level, you're looking at 60%, down to the $1.20, you're looking at 64%. So it's really not out of the ordinary. It just takes a lot more time. And yes, you will see some bounces in between, which I guess people think that it's, it's coming back, and then you just keep buying the dip on the way down. And so where I would use this analysis is how I would tie it into USDT. If you start to see some sort of, this USDT dominance going up, probably likely that these altcoins are going to continue going down. And then if you start to see a resistance level hit and the USDT dominance start to weaken, that might be a good area that the altcoins are going to start climbing back from. Think about that. Okay, so SUI has also broken the 50% level here at around $2.90. One daily close there. It's tested those lows and closed below them. So maybe you see a little bit of a rally here, but other than that, I think we've got some areas around that 230, 240 to come back and test. Apart from that, it's still in a relatively good position overall. We did have our top signal that played out and the market has crashed. I talked about it in real time on the channel that you guys hopefully remember. We had our signal here where it closed underneath the highs and it started to show some weakness, and then it all happens at once. The same deal happened with Solana here. We had the 3-day rule at the top. You got this quick breakout, but no closes above it. 3 days down, 3 weeks down, and again, you see it on the weekly chart. So it's the same signal. It keeps showing up and it keeps helping you guys, I hope, in the markets to identify that strength and the weakness. Now, to tie this all together with the macro bull market and the potential of a multi-year bear market, I come back to this video that I posted on December 19th, so now over 2 months ago, on the day that we saw potentially the first signs that we're starting to see a weakness overall in the the macro cycle here, our 18-year cycle. Now, it's not 100% confirmed, but it is putting me on red alert with a time frame now, which is probably a time frame that's much, much longer than the majority of people have, looking at somewhere around that 12 to 24 month period of how much further this thing has to go. And I'm saying it now because at the time, whenever we come to a top in the S&P 500, I dare say that the majority of people will say that this time is different. Trump has got us through whatever problems we're seeing now. The tariffs are working. This is working. You're full of shit. Nothing is wrong. We're hearing a lot of stuff that is wrong now, which is leading me to think that we still have further to go in the cycle. We're hearing a lot of stuff that is wrong now at highs. I don't think I've ever seen a top in the market, whether it's a stock market, whether it's Bitcoin or real estate. I've never seen a top form when there is so much negativity about how bad things can get. The tops usually form when there is a lot of good news out. People cannot fathom the market's going down. So I don't know what that's going to be in 12 or 24 months time, how positive things could get, but we do see some of those cracks here. And for the Home Builders ETF, that was the period there in December that I made the video saying here, first time in history I'm saying this because I hadn't seen it in history at all prior to that, because I wasn't on YouTube. The last time it happened was in 2005. I don't even know if YouTube was around. I think it just started in 2005. So anyway, you can understand why this is the first time in history I'm saying it online with YouTube. Anyway, going forward from here, we have some key levels to the downside, looking at support around 88. Breakdowns of 88, I think things are in big trouble, and that is basically the bell ringing at the top there of around November of 2024, and then the time frame starts from there. What am I talking about? I'm talking about the winner's curse phase here. 2 years up and the 18-year cycle. So this is sort of like the end of the line coming up. 2-year cycle, 14 years up, 4 down, looking for a top somewhere around 2025, 2026 for the US real estate market and economy. And then things will follow from that point. Not there yet, but I still see a little bit further upside to go, which then leads me into the BTC long-term chart here and how much further maybe we have to go here. And there's a lot of maybes and ifs because at the end of the day, no one has a crystal ball to the black side of the chart. We just have to guess as best as we can with where things are going. And I guess if you have been on the channel, which I thank you, like and subscribe, of course, from 2022, we were looking at the lows for BTC around this point. I had no idea that it would go to 15K. I didn't know if 17K was going to be the low there. We got a couple of days at around 17.5, but it seemed like a good time, a good risk reward play for the market to be buying up at those lows for BTC. And of course, here we are 500% later at the tops. Now, we find ourselves 830 odd days into this bull market. And typically you see these bull markets last for about 1100 days. So give or take a little bit there, they are quite long cycles when you look at it in terms of days. But if we are in around 800, there's about 1100 to go. That gives us about 2 to 300, something around that 250 left, which takes us out to about October, November of this year. And in terms of a multi-year bear market, I potentially see that happening in the next cycle. Reason being is I don't think we're going to see BTC break into a new all-time high in the next or after the next correction. So if we get this top, who knows, sometime in the next 12-ish months, and then we go on a big correction for 12 or so months, the next move to the upside might be a lower high to the current all-time high. So I'm looking at prices going high. Forget the numbers on the side here. If I could block them, I would. But whatever this market moves up to, maybe it runs for a year or two, starts to rally from 2026 into late 2027. I think at this stage anyway, there's still a lot of work to go here. There's a lot of days that we have to play out. I think that next top might be a lower high. So it could be argued that that would be a multi-year bear market because it hasn't broken into a new all-time high. But you would also hear the argument that, well, if it's gone up for a year or two by 100, 200% from whatever that low comes in, say that low comes in at 70K and the market rallies up to 150K, you're still going to get over a 100% move. So it's still a tradable move. So it's up to you whether you define that as a bull market within a multi-year bear market, or if you just call the whole thing a multi-year bear market and that this is basically just a rally in a multi-year bear market. I think longer term, now we go out past 2030, there's still going to be higher prices here. I've got to see what happens after this peak, and I do reserve my right to adjust this accordingly. So therefore, I don't know, hit the subscribe button, follow the journey along here, see how we go, and I'll see you guys back at the next video. In terms of a multi-year bear market, there are still no signs, in my opinion, from my analysis, that is going to happen from this high, and I'm treating this as another buy the dip opportunity, but be safe with wherever you're buying these dips, because like you can see with the altcoins, they can go ballistically low and bounce around, costing you a lot of money. So stay safe out there. I'll see you guys back at the next video. Till then, take care. Peace out.